Good evening to all the participants who have joined from India. Good afternoon and good morning to those who have joined from outside India in all these three time zones. Ladies and gentlemen, it is my proud privilege as the chairman of the GST and Indirect Taxes Committee of the Institute of Chartered Accountants of India, headquartered in New Delhi. As the chairman of the committee, I deem it a great pleasure to welcome each and every one of you for sparing your valuable time and being with us for next 2 hours. On your screens, you can see the man in his overcoat, CA Umesh Sharma, the Vice Chairman of the GST and Indirect Taxes Committee of the Institute of Chartered Accountants of India. And you can see the renowned world expert, the top 100 tax experts of the world today, and a person who has featured as the #1 leader in tax among the women in this century, Rita Della Feria from the United Kingdom. It's a proud privilege for the committee. It's a historic moment for the committee, I must say, that a renowned world expert like Rita is here. Friends, all of you may be aware, may not be aware. To bring Rita Della Feria to a forum is extremely difficult because of her times. She's engaged with nations. She advises countries on the taxation policies. She works on policy, and herself being a chair of tax in law at Leeds University, she coaches, she trains students, and especially those who do doctorate in taxation. We wanted to give an international flavor to Indian GST. In fact, Indian GST follows the OECD model. The OECD model, which is there in about 100 plus countries, India is one such country which follows the OECD model. Hence, the principles of taxation are the same. The problems are the same. The issues are the same. Court cases, multifarious, I must say. And above all, one of the principal revenue earners for any nation, any country. The GST, the VAT, or worldwide known as the consumption taxes. Rita, it's an extreme privilege for us. Thank you for being with us today. Thank you for sparing your valuable time, though it is virtual. But then, as I always tell you, we will bring you physically in India someday. Ladies and gentlemen, it is my privilege now to request Umesh Sharma, our Vice Chairman, to give a brief overview and also to introduce Rita to this grand audience of 1,000 plus who have logged in now to hear this wonderful talk by one of the greatest leading living tax expert in this universe. Over to you, Umesh Sharma ji.
Yes. Good evening to all. Thanks to Rajendra Kumar sir, our chairman, Indirect Tax Committee. Thanks to the team of our Indirect Tax Committee for organizing such a wonderful VCM. And thanks to beautiful Rita ma'am for joining us from UK. The topic for today is a progressive VAT. And what we have seen from the opening remark from our chairman, that GST, the fundamental is VAT, that is value added tax. So the future taxation system of indirect tax all over the world is moving towards VAT. And to get the knowledge of progressive VAT, we have most advanced speaker today, and I am privileged to introduce Rita ma'am in front of all the audience. Rita Della Feria ma'am is a professor of tax laws at the University of Leeds. and an international research fellow at the Oxford University Center of Business Taxation. She received her law degree from the University of Lisbon and did her PhD at the University of Dublin, Trinity College, and after a brief career in practice. Her research focused primarily on tax laws and policy, and she has published widely on these areas, including 5 books and 60 plus journal articles and book chapters. Hats off to ma'am. She has been a visiting professor or scholar at various universities around the world. You name the university and ma'am is there to teach you the tax laws. University of New South Wales, University of New York, McGill University. She is actively engaged in global tax decisions, has provided tax policy and legal drafting to several governments worldwide, and testified before 5 elected parliament. Her research is regularly cited by the courts across Europe, including EU Court of Justice and various European Supreme Courts. So these are the most important credentials of the map. Friends, this is not the end. It is just a starting. Professor De La Feria was listed 2 years running in 2015 and 16 in the Global Tax 50 as one of the most influential tax person in the world and co-recipient of 2016 Outstanding Woman in Tax Award, and in 2019 was recognized in top 100 years of women in tax as one of the most influential women in tax in the years of last 100 years. And I wish if ma'am stand for a beauty event, you will also receive top award, ma'am. So you have beauty, you have a brain, and you have a very smiling face. Welcome, ma'am, to our session. Over to you.
Thank you, Umesh. So, Rita, the floor is yours. All of us are eagerly waiting to hear your words of wisdom and the knowledge that you have to share to this greatest country, one of the greatest countries in the world, India. India is not a country, I always say. India is a world because India's geography is ocean, rivers, lakes, agriculture, forest, wildlife, snow, desert. So whatever the world has to offer to humanity, one country in the world, India can offer. And if India has implemented GST in a manner in which it has been done, the only federal country in the world to implement GST in this manner. Over to you, Rita.
Thank you so much for the lovely introduction. Well, first, thank you for the invitation. And then second, thank you for the introduction, which I am most honored to receive. Rajendra is right. I have a busy schedule, but I was keen on coming to talk to the Indian audience because, as he correctly says, it is a huge country, one of the biggest countries in the world, full of tax experts and full of people that can make a difference in the world. So it's truly a huge honor to be here. I'm just sorry that it is online, not in person, but he has already promised me that that I'm going to come in person soon. So I look forward to that visit. In the meantime, what I'm going to present today is, as they mentioned, both Rajendra and Umesh mentioned, a proposal for a progressive VAT. So this is based on essentially 2 papers, 2 research papers, one that has already been published, and I will be happy to forward it to anyone in the audience who is interested. The other is still unpublished. It is currently being prepared. Hopefully it will be out in the next couple of months. And once it's out, I will also be very happy to forward to any member of the committee or any member of the audience who is interested in the topic. So without further ado, I'm going to start sharing my screen. So hopefully you can all see the screen. Yes?
Yes.
Perfect. Okay, so What I'm going to talk about today is the progressive VAT. But before we go into that, I'm going to talk a little bit about what both Rajendra and Umesh alluded to, namely the spread of the VAT, the huge phenomenon that VAT or GST, as it's known in India, is. And it truly is a remarkable phenomenon. And then I'm going to tackle the biggest problem perceived by the GST, which is the perceived regressivity of the tax. So the fact that impends more on the poorest. We'll discuss the traditional way in which that regressivity has been addressed, which is also the Indian way. And then we're going to talk about more modern ways of addressing the regressivity of the VAT, namely by introduction of a progressive VAT. So you're to come along for a big ride. The global spread of the VAT. So let's start with that. This is, as it has often been mentioned by scholars, an unparalleled tax phenomenon. So this is a tax that is just 100 years old. It was invented in the 1920s, implemented for the first time in the 1950s, and from then on, it has spread completely around the world. So there is hardly a region of the world now that does not have a VAT. It is a completely unparalleled tax phenomenon. So at Leeds University, as chair in tax law, I teach many areas of tax, not just consumption taxes. And we know from the history of other taxes that they have just longer histories. So there is, of course, income taxes. They have a big importance, but they don't have. But there's the history of those taxes is much longer than consumption taxes. No other tax has spread around the world with the quickness and the speed in which VAT has. So from the first introduction in the 1950s, it spread across Europe in the 1960s. Then by the 1980s, it already had spread to big parts of South America and Africa and Asia. It is at this point that one of the biggest kind of developments to the tax is introduced, the so-called modern VAT, first introduced in New Zealand in 1980. But by 2001, over 65% of the world had a VAT, and today the number is 170. Now here, this map is produced not by me, but by the IMF. And you can see the parts in blue. Dark blue are all the parts around the world that have a VAT. The only kind of light blue sections that you see are the United States, which, if you want, we can discuss, but mostly for political reasons, the United States hasn't been able to agree on a VAT, and small little parts relatively small parts of Africa. The last area of the world to introduce a VAT in terms of as a bulk has been the Middle East, where several countries have already introduced in the last couple of years. Others are in the process of introducing a VAT. So that was kind of the last kind of big region of the world that didn't have a VAT. But it's fair to say that every country has succumbed to the allure of the VAT. And why is that? Because VAT has very strong technical advantages. And the strong technical advantages are primarily its neutrality and its efficiency. So it's neutral to the extent that it creates an equal playing field, and it doesn't, when well designed, it doesn't have an impact on the decisions of economic operators. So you can decide to buy chair 1 or chair B, table 1 or table B, computer A or computer B, and in principle it makes absolutely no difference to your decision whether the tax is there or not. So it creates an equal playing field on your choices of consumption. So it doesn't influence your consumption decisions. Second, it's neutral also from an external perspective, because VAT is charged according to the OECD guidelines, as Rajendra just said earlier, on the basis of the principle of destination. it doesn't influence the decisions of economic operators on where to invest. Why? Because it doesn't matter if your headquarters is in the UK or if it's in India. VAT is going to be charged where the customer is located. So it is neutral as regards investment decision. So this is the neutrality side. On the efficiency side is the fact that it costs relatively small amount of money to collect, but it collects a lot of revenue. So the cost benefit analysis of collecting a VAT is very, very positive. So it is an important source of revenue worldwide. It depends on country to country, obviously. Generally speaking, it tends to be the main source of revenue in developing countries and in emerging economies. It tends to be the second biggest source of revenue in very rich countries like the ones in the north of Europe. So in any event, by any measure, it is a massive collector of revenue. So there is many countries around the world where VAT is literally half of the collection, overall tax collection. So all the other taxes put together collect as much as VAT does. Now, it has all these technical advantages, but it has one big perceived flaw. It's regressivity. The idea that it is not equitable from a vertical perspective. So that it depends too much on the poor, that pay a big fraction of the tax, and too little on the rich. So, first of all, before we look at how we try to address this regressivity, is this big flaw in the VAT design. First, the basics. Is it true? Is VAT really a regressive tax? And the short answer is that it is, but not as regressive as people think it is. Why is that? Now, imagine that I earn 1,000 a month, 1,000 of whatever, it doesn't matter. It could be $1,000, £1,000. I earn 1,000. Rajendra earns 10,000. Now, both of us consume everything that we earn, right? I consume the 1,000, Rajendra consumes the 10,000. In this context, if you apply a flat rate VAT, both of us of 20%, both of us have paid 20% of our income in VAT. I have paid 2,000. He has paid, I have paid 200 and he has paid 2,000, right? What does this tell you? It tells you that VAT, so far as all consumption, so all income is consumed, acts as de facto a flat rate income tax. So if you consume everything that you earn, VAT is a de facto, is in practice, a flat rate income tax. Now, let's imagine now there is a third person who actually earns not 10,000, but he earns 100,000. And that means that he no longer needs to consume everything. So he has loads of savings now. So he consumes a big part of his income, yes, consumes probably, let's imagine 80, but he still saves 20. In this situation, VAT is no longer capturing his savings. So VAT is actually not acting as a proportional tax anymore on income, but is actually is a regressive tax. So what is the big picture on this? VAT is regressive to the extent that you save. To the extent that you consume everything that you earn, VAT is not regressive. Is a proportional tax on income. Now, when do people start saving is then the key question. In general, rule of thumb, the overall, we calculate broadly. On average, people start saving about halfway through the income distribution. So what you're seeing on the screen is a sterilized model, economics model, in which one is the 10% poorest and 10 is the 10% richest. And you'll see about half of the way at the 5 percentile mark, people start saving. This is the broad assumption, but it depends heavily on the structure of the economy. So if you have a country that is very unequal, then it is possible that people only start saving at the 10% top of the income distribution. So at the top percentile of the income distribution, or at the top 20%, the top 2 percentiles of the income distribution. So what you have is there is a regressivity, but it really how regressive the tax is, it depends on the structure of your economy and the extent to which people do savings. Now, some people will tell you, some economists will tell you, that even when people do savings, it's not really that regressive, because any saving that you do is deferred consumption. So you're not consuming now, but you will consume in the future. Now, I'm not particularly convinced by this argument, and I'll tell you why. Because that deferred consumption, when you save a lot, could be very, very long into the future. So the time lag between the moment you do the saving and the deferred consumption could be literally decades. So you could be actually passing the money on, the savings on, to your children, to your grandchildren, etc. And you can envisage a moment in time where these savings actually were never taxed because there is no longer a VAT 200 years from now. So I think that the deferred consumption argument doesn't really hold. So therefore, VAT is regressive, and this is something that we have to take into consideration when we design VAT systems worldwide. Now, should we care about this regressivity? And this depends on how you talk about the regressivity. So, for example, if you say to people, like I did, that just now, that I earn 100, Rajender earns 1,000, Umesh earns 10,000, and all of us only pay 20% on our as tax, people will say, oh, that's a bit unfair, right? Because Umesh earns a lot more, he should be paying more. But if I tell them that one is paying 20, the other one is paying 200, the other one is paying 2,000, and people actually will feel that that is more fair. Why? This is a cognitive bias, and it's known as the metric effect. People are not so convinced when they hear percentages, but if you actually give them the amount of money, they realize that one is paying more than the other, then they are more likely to say that that is fair. So first of all, the way we feel about regressivity is not completely rational. It is influenced by cognitive biases. Second, there is an issue known as disaggregation bias. What does this mean? The VAT is regressive, we just discussed it. The issue then is whether we should address that regressivity of the VAT within the VAT system. Now, we could think about other ways of addressing that regressivity by doing other things on the tax system. For example, increasing personal income tax credits. But because we are talking about VAT, people tend to focus on the VAT. This is known as disaggregation bias. We forget that there is other members of the tax, other parts of the tax system. We forget about the tax mix, as it's known, or the public finance mix, and we concentrate exclusively on the tax that we are being asked about, which is the VAT. So the way we feel about, because of these biases, the metric effect, the disaggregation bias, the way we feel about regressivity is not of the VAT is not completely rational, and it is influenced by non-conscious bias. Nevertheless, the global overview, if you look all over the world, is that we have felt the need to address the regressivity of the VAT within the VAT system by implementing exemptions, and reduced rates of VAT. And we have done this all over, from the old VAT systems in Europe that have 2, 3, 4 rates, to the much newer GST in India that has a lot more rates than that. So almost every country around the world, with the exception of the perfect VAT system in New Zealand, applies some form of exclusions from the base, either reduced rates or exemptions. Now, of course, you have many degrees of how much exclusions from the base. So you have cases of Europe of 2, 3 rates. You have cases in Brazil in which the whole country has hundreds of rates, because each state in Brazil has sometimes up to 15 rates of VAT. I am looking forward to hearing what the situation is in India, but I know that there is a lot of rate differentiation in India as well. General rule of thumb is that the older the VAT system, the more exclusions from the base it has, the more exemptions and the more reduced rates. But as the Indian example and the Chinese example demonstrate, this is not an exact science. So there are new VATs like the Indian, like the Chinese, that still have a lot of rates in their system. Now, is this a good way of addressing the regressivity is then the following question. So we have been doing this all this time on the expectation that it will help the regressivity of the tax and will make VAT more progressive. And this is what I'm going to try and challenge probably your preconceptions, and to say that in essence, it's not very helpful. And it starts with the fact that this actually is a massive revenue cost. So there is a massive tax expenditure associated to these exemptions and reduced rates of VAT. And this matters a lot because we know that the people that benefit the most from public services tend to be the people that are the poorest. So the less revenue we get, the less revenue we have to spend on public services, the bigger the impact on low-income individuals. But there are also other problems beyond the revenue. There are also other problems associated with applying reduced rates of VAT and exemption. And it starts with what is known in economics as the incidence problem. What is the incidence problem? In general, you assume that if taxes decrease and the consumption taxes decrease, prices come down. In basic theoretical economics models, this actually happens. So you reduce the cost of the tax, and in general, in a competitive market, prices decrease. Now, as we have seen with the energy crisis in a very stark manner, with many countries around the world decreasing VAT rates on energy products, in the expectation that prices will be reduced, it is not a guarantee that the prices will actually decrease. So unless you can control for prices, and prices are regulated administratively, as it happens in a few countries around the world, otherwise, there is no guarantees that the prices come down, because it's dependent on businesses to decrease the prices. And what has happened in the current energy crisis is that businesses have decided that they don't want to decrease the prices. Now, you can say that what is wrong then? The economics models tell you that price should decrease, price not decreasing. So in theoretical models, this is true. Empirically, we have tested this hypothesis over and over and over again in many countries around the world, across many sectors, and critically across business cycles. So both in recessions and in expansionist economies. And the results tend to be the same. Prices do not always come down. When they come down, they only partially come down, often only temporarily, and they go back up. Why is that? Now, we know that the response is heterogeneous, so not all businesses act the same. But there are clear trends on why this is happening. Now, initially, when we started detecting that this was an issue, about 20 years ago, we thought maybe the markets weren't competitive enough, right? So maybe this is happening. Prices are not coming down because there is a lot of demand, there is not enough supply, and therefore, there is no reason for businesses to put their prices down because people are still buying products. This is not what we think now. We think that is certainly non-competitiveness of markets is certainly part of the story, but it's not the full part of the story. We think that there is also other elements going on, not least the fact that people are used to paying a certain price. Therefore, they tend to pay that. Be willing to pay that price. So if people are willing to pay that price for businesses, there is no point on decreasing the price. So it's not rational for them to decrease the price. This is known in behavioral science as anchoring. So you expect the price of bread to be 5, and if the VAT decreases and the price becomes 4.90 or 4.80, you're not even going to notice. So what does the owner of the bakery does? He doesn't bother. He leaves it at 5% and he pockets the difference between the old price and the new price. So we have tested this, as I said, across many sectors, big experiments, small experiments, in many countries, in only one country, to see if there is any differences, and the pattern is very clear. There is no guarantees that prices will come down, and even when they come down, it's only a partial decrease of the tax. Not all the tax saving is passed on, and it often is temporary. So it lasts, the decrease in the price lasts a year, and then it goes back up. Now, you'll say to me, well, that may be the case, but maybe we should just still decrease the tax, and hopefully some prices will decrease. And we can still help poor people. So let's assume that prices do decrease, and you are able to, so the cost of food or the cost of healthcare or the cost of education decreases just by decreasing the VAT on it. Does that help the poor? And the answer is it depends. It may help the poor, but it helps the rich a lot more. What you're seeing there in your screen are graphics done on the basis of real data from a country. They weren't done by me. They were done by an economist that I worked with in the past. And they are done on the basis of data from a specific country, which I can't tell you which one, and their consumption data. So what you see there is an exemption given to food, healthcare, education, and transport. And what you see at the bottom of the graph, 1 to 5, is income distribution by quantiles. So the 1 represents the 20% poorest, the 5 represent the 20% richest in that specific country. Now, the exemption is introduced on GST for all these products, and what this is telling you is how much money, assuming that the prices do come down, how much money is saved by quantile of income distribution. And what you see is that number 5, so the 20% richest, gained a lot more from the exemption than number 1. Why is that? Because it's a very simple consumption trend. Rich people consume a lot more than poor people, even of essential items. So you will say, oh, but everyone needs to eat. And that's, of course, true. But they eat in things that are of lower value. So it's not that the richest 20% eat more, is that the richest 20% spend more on food. What about healthcare and education? Doesn't everyone have to have access to healthcare, access to education? Yes, they do. But here is the catch. State, public healthcare and public education is concentrated on the 20% richest in the society. So everyone goes to hospitals, but only the 20% richest go to private hospitals and private schools and private universities. And that means that VAT, when you take away the exemption, it is only going to be taking away the exemption VAT from those rich people, from the private clinic, from the private hospital, etc. Why? Because in the state you don't pay, and VAT is put on price. So even though everyone uses education, everyone uses healthcare, and this is perhaps completely counterintuitive to majority of people, exempting these types of services actually helps only the richest, because only them go to the private form of those services. Now, you may be thinking at this stage that this is not the case in India. You may be thinking at this stage, and I have encountered this on many occasions, as was mentioned in the introduction, I do a lot of policy work. I have done policy work in all 5 continents. So in every continent in the world, I have discussed these issues, and often you have this reaction, oh, not in our country. In our country, everyone goes to private healthcare, or everyone goes to private schools, because the state healthcare or the state education is so poor. And that usually tells me not that the poor go to the private clinic, but that you and your friends are all on the 20% richest. And this is because this is what is known in behavioral science as a salience problem. This is because we notice what others do by the people around us. So we assume that if everyone is around us is using a private clinic, that the whole society is using a private clinic, or almost everyone is. If we assume that if all our friends are putting their kids into private schools, that a lot of people are. In reality, when you look at the data, that is not the case. And it's because we notice people that have a higher status than us. This is a human behavior well documented in behavioral science studies. We always tend to look at those with higher social status, and that includes those that have higher income. What is the sum of the, without getting too bored, getting too boring in terms of data, what is the sum of the conclusions on analysis of this data on the distributional effects of exemptions and reduced rates is basically this. The majority of benefits of applying reduced rates or exemptions accrues to the 10% richest. And this is the case across the world. We, in the paper with Arthur Swistak, we look at data from 3 different countries. A low-income country, which is Mozambique, 1 medium-income country, which is Georgia, and 1 high-income country, which is Poland. Across all these countries, the data holds. Consumption patterns are the same. Now, there might be differences about what you consume, etc., but consumption patterns hold. People, as their income increases, increase their consumption even of essential items. And that means, going back to my graph, you see this red line here. The red line here is the regressivity line. What does that mean? It means that when you exempted healthcare and when you exempted education in this country, the regressivity of the VAT actually increased as opposed to decreasing. Now, food, as you see, even though the richest benefit the most, decreased a bit the regressivity. What does this mean? That in situations where you exempt services or goods, where there is a public-private option, like healthcare and education, regressivity immediately increases. If you exempt services and goods that are so-called merit, like books and cultural events, regressivity increases. Why? Because as much as we would like everyone to read books, and I'm a huge fan of books, I'm a huge fan of cultural events, I particularly like the opera, but basically only the 10% richest go to those events. So as soon as you exempt those events, you're just giving a tax break to the richest. So regressivity increases where there is a public-private option. Regressivity increases where there is, when you're applying it to merit items. Now, on food, the situation is more dubious because it depends on the structure of the economy. In some countries, regressivity may increase, and some countries, regressivity may decrease. What is this broadly dependent on? How informal the economy is. So in countries with high informality, where poor people buy in informal markets, if you apply an exemption to food, you might be applying the exemption only to the richest. Why? Because only the richest consumed in formal supermarkets, in the formal economy. If you have an economy that is highly formalized, where even the poorest buy in the formal economy, then applying an exemption to food may decrease the regressivity of the tax. So the situation as regards food is more dubious. It depends on the structure of the economy. I would say that in the case of India, because there is a high levels of informality, you probably, by exempting the food, you might be increasing the regressivity of the tax, but I haven't looked at the data, so I can't make a certain call. But these are the broad general trends. Now, in addition to all these issues, so the incidence problem and the distributional problem, you have, and the revenue loss, you have a bunch of spillover effects that us as tax law and accountant experts are very familiar with. First of all, every time that you have a reduced rate or an exemption, you have qualification problems. Is it A or is it B? Then you have loads of issues of planning, avoidance, and fraud. And then you have massive compliance costs. So filling a tax return that has only one rate is relatively easy. Filling a tax return that has 10 rates is not so easy. So there is a bunch of costs, which we would call spillover effects, associated with reduced rates of VAT and exemptions. Now, I'm sure you have all heard of the Jaffa cake story because it's so famous across the world. For those that haven't, the story is very simple. Jaffa cakes are a product that is sold around the world, but I would dare say that that is sold in India as well, but it's very popular here in the United Kingdom. And it's a product about this size. I can't tell you what it is because that was the whole object of the court case, a product of this size. And it has a sponge base and then has kind of a solidified marmalade on top, and then it's covered with chocolate, right? The case arose in the 1990s of whether this was a cake or a biscuit. Why? Because in 1972, when the UK legislator introduced the VAT, it made a distinction between cakes and biscuits. It said that cakes were subject to a zero rate of VAT, but biscuits were subject to a standard rate of VAT. Why? At the time, in 1972, the majority of cakes were bought in small bakeries, whilst biscuits were regarded as a luxury product that was purchased in supermarkets. So the legislator, trying to help small producers and encouraging people to go to small bakeries, applied a zero rate of VAT to cakes. Fast forward many years, and the case arose as regards Jaffa cakes and whether it's a cake or it's a biscuit. The details of the court case are quite funny, and so this whole discussion I often have with my students in classes about whether it should be a cake or a biscuit, but ultimately the court has decided that it was indeed a cake and therefore subject to a reduced rate of VAT of 0%. This that you're looking at is photographs that I actually took in a supermarket in the UK. These are Jaffa cakes, now classified as zero-rated items, and it's being sold on the biscuit aisle. So what happened is that even though the court decided that the cakes for purposes of the VAT, in practice, the products are still being sold as biscuits and competing with other biscuits in the market that are that have a standard rate of VAT of 20%. So there is massive distortion created by this decision to classify Jaffa cakes as cakes for the purposes of VAT. There is a bunch of other cases. I won't dwell on it too much, but there are a lot of cases now at European level on the European Court of Justice to establish what is healthcare and what is not healthcare. Now, obviously, traditional healthcare is regarded as healthcare, so operations, consultations, etc. But there are new forms of health-related services that are more dubious. For example, cloning of organs, storage of stem cells. All of these issues have been subject to court case decisions because once you include that distinction between what is subject to a standard rate and what is subject to an exemption, you immediately have these kind of gray areas. It's not A, it's not B, it's A plus or B minus. And that's where the whole discussion emerges. Now, this creates a huge amount of pressure for businesses, as I'm sure all of you that are listening to this as experts in tax and accountants will know. So businesses struggle to even know what is the exact rate they should apply to items. Now, I always give the example, personal example of one of my brothers. I'm actually one of 6. I'm actually the eldest of 6 siblings, which is probably why I'm so bossy and loud. And one of my brothers is an executive at Nestlé Portugal, where they produce these items that you're seeing on the screen, and these yogurts that have a triangle that can be mixed with products that can be mixed with the yogurt. So this triangle typically has little bits of chocolate. They could be Smarties, they could be Kit Kats, they could be Maltesers, whatever, or jam. Sometimes it has like jam mixtures. Now, what is the problem here? The problem is that in Portugal, yogurts are regarded as a product subject to a reduced rate of VAT because it's consumed primarily by children. So the legislator felt that it should protect the consumption of yogurts, but chocolates and jams obviously are not, because they are regarded as a luxury or at least a harmful product for your health. And therefore, what my brother tells me is every time that he needs to launch a new product in the market, he has to hire one of you guys. He has to hire a tax accountant or a tax lawyer that will be able to tell him, is this product that I'm launching in the market subject to a standard rate of VAT or to a reduced rate of VAT? Now, Nestlé and my brother can obviously pay this type of products, services, because they are a big multinational. But there are thousands and thousands and thousands and thousands of smaller businesses that cannot afford to have a tax lawyer at call or a tax accountant at call. And therefore, the fact that you have all these compliance difficulties is actually a deterrence to business. We know from inquiries that have been done in Europe by Eurostat that the fact that you have a VAT compliance issues across Europe is one of the top 10 deterrences to business. So when you ask businesses what are the biggest impediments to operating in other countries, one of the top 10 reasons will be VAT. So it creates massive problems. It creates also manipulation problems. I'll just mention briefly the case of Pringles, which I'm sure exists as well. In India, they are a product that sells worldwide. Now, this is also based on a court case situation, and the UK legislator had a provision on it, or has still a provision on the code that says snacks are subject to a reduced rate of VAT, but it says, it has like a comment, says except potato crisps. So potato crisps are subject to a standard rate of VAT. Other snacks are subject to a reduced rate of VAT. Now, what does this matter for Pringles? Pringles for many years were treated as potato crisps and subject to a standard rate of VAT until basically this was contested in court and alleged that this should not be treated as a potato crisp. This should be treated as a snack, and therefore subject to a reduced rate of VAT. Why? Because Pringles are actually not made primarily of potato, and so they have potato content, but over 50% of Pringles are made of other things that are nothing to do with potato. So the issue is, in essence, that because they don't have potato, more than half is not potato, they can't be called potato crisps. The court eventually agreed with this allegation, which meant that Pringles would be now subject to a reduced rate of VAT, and other products in the market that are competing with them would be subject to a standard rate of VAT. Now, if you were a product that was competing with Pringles, so I don't know, if you were Russell's or Lay's or whatever the competitors are for Pringles, what you would be looking at would be very simply to think, why do I not reduce the potato content of my product? Maybe I'll be subject to a reduced rate too. Now, maybe that won't happen because there's a bunch of other commercial reasons to keep the flavor and the potato content, etc. But in essence, the tax system, by applying a reduced rate of VAT on the basis of potato content, is encouraging the market to have less potato. So therefore, to make the products more unhealthy. So a legislation that was meant to encourage healthy choices of snacks actually inadvertently ended up encouraging the production of very healthy snacks and potato-based products. E-books, are they books or are they not? There is a bunch of European cases on whether e-books are books for the purposes of VAT law or not. Some court cases say that it's the same. It should benefit for a reduced rate of VAT. They fulfill the same functions as a book. Other court cases say actually there is enough differences to allow them to be subject to a different rate of VAT. So we have this old legislation that was thought for a different world, and then when new products appear in the market, like ebooks, we don't have a way of adapting. Finally, tax planning, the tampon book. Now, I'm not sure if the discussion is being held in India, but there is a worldwide discussion going on about the rate of VAT applicable on tampons. Now, many countries around the world have already reduced the VAT on tampons, but many others apply still a standard rate of VAT. Now, a lot of countries also apply a reduced rate of VAT to books. So what was the brilliant idea in terms of tax planning? This company decided to put tampons inside books and sell it as a book, in essence, that has some tampons inside. And this way, it could benefit from the reduced rate of VAT by doing what we call in VAT as a composite supply. So all these problems stem from the fact that we apply reduced rates of VAT to address and exemptions to address the regressivity of the tax. So the sum of the matter is very simple. Benefits of applying reduced rates of VAT to protect low-income individuals or exemptions are at best dubious. We have no guarantee that price comes down. And even if the price comes down, the tax break is concentrated primarily on the richest 10 to 20% of the income distribution. So the 10 to 20% richest in that country. The costs, however, are enormous. It starts with the revenue costs, very big tax expenditures associated with not taxing these items, but also all these other spillover costs. The money that is spent on court cases on these qualification issues. Now, 60% of litigation in the UK, tax litigation in the UK, is on VAT. A huge part of that is on qualification problems. So the amount of money that is spent on these qualification issues is enormous. And then it creates a huge problem for businesses, as we saw with compliance, and for tax administrations, because they have to police this. So creates opportunities for planning, as we saw. it creates all market distortions. So the costs are very, very high and the benefits are at best dubious, which is why in the 1980s, New Zealand came up with a modern way of addressing regressivity. What they said was this, in essence, these reduced rates of VAT and exemptions are not working, are not a good way to protect the poor. So we have to come up with a different way of protecting the poor. What could we do? We could, in essence, have a standard rate of VAT, no exemptions, but with that revenue that we collect, we compensate, we make transfers, welfare transfers to low-income households. So we target the assistance directly to lower-income households through direct transfers. This was a huge success in New Zealand. If you speak to any tax expert in New Zealand, they will tell you that it was a massive success. So the New Zealand VAT has very little, runs very smoothly, has a small amount of tax administration needed because it runs so well. And they are able to help lower income households. Now, this system has also applied in hybrid formats in other countries. In Canada, for example, there is some form of welfare transfers as well to compensate regressivity. Colombia is thinking about the same type of system. It was introduced in my own country, where I was born, in Portugal, as well, in a kind of sectorial manner. But it is fair to say that considering how successful it has been in New Zealand, the take-up has not been widespread. So you would expect that a tax policy that it was as successful as this one was in New Zealand, that it would immediately be transferred to other countries, that other countries would have this idea, oh, let's do like New Zealand has done. But as you can see from the Indian example, from the GST, that is not the case. Countries are still applying reduced rates of VAT and exemptions, even though the New Zealand experience has been around for nearly 40 years now. So we know it is successful. Experts know that it's successful, and still we cannot apply it. Why can't we apply it? Why have countries opted not to implement this policy? Two main reasons. So there's two reasons for this. One is a kind of targeting problem. So a basic issue of actually finding the poorest to help with. So sometimes countries will say, well, I would do this, but that implies, the direct transfer system implies that I know where the poor people are, that I can identify who the poorest are. And the truth is, I don't have the means to do that. I don't have the sufficiently developed enough welfare system to be able to target those lower income people. And this is the case in a lot of developing countries. So this is a problem that has been reducing significantly over the last 2 years because of the pandemic. We have become better at targeting low income people, but traditionally it has been a massive source of concern in developing countries of implementing a system like this, because in essence, we may not be able to find the poor people so that we can help them. Now, this explains developing countries, but it doesn't explain why in Europe we still have loads of exemptions and we still have reduced rates. Something else is going on that is not just the targeting problems, because Germany, the UK, Denmark, Sweden, they all have very sophisticated welfare systems that are very good at targeting low-income people. So that doesn't really explain it at all. So what's going on? And what's going on is the impact of public perceptions on the design of the VAT. It's not just about what is efficient or what is good policy. It is about how people perceive it. Now, I'm going to give you a couple of examples. There is many examples, and if you want more, the paper that I can give you at the end will have all these examples. But I'll choose two examples to illustrate this problem. In 1981, Ireland was a country that was struggling with very high budget deficits. Now, today you think of Ireland and you think of a tech hub, a very rich country, which it is. but that was not the case in 1981. And therefore, the government at the time felt the need to impose an austerity budget, so a budget that increased taxes and reduced spending to try and balance public finance. One of the areas where it decided to increase taxes was VAT. Ireland had a lot of products that were subject to a zero rate of VAT, and the proposal in the budget bill was that a lot of those products would be moved from a reduced rate of VAT to a standard rate of VAT. Now, this move included many products, but amongst those products were children's shoes. Now, the children's shoe element of the budget was very, very tiny, as you can imagine, because it's just such a small item in the big context. But this is the product in which the media concentrated on. And for weeks, the headlines were, "Government wants to tax children." Now, what happened was that when the budget came to Parliament to be voted, the members of Parliament that supported the government turned against the government on the basis of these increases. The government budget did not pass. The government fell. New elections were held. The opposition won, and in essence, it all started with the VAT. Now, there will be a lot of Irish that will tell you that there were other factors at play, that it wasn't just about the VAT on children's shoes. And that is true. I lived in Ireland for many years, and my husband is Irish. But it is true that this has become an almost mythological story in Europe. Every tax expert knows this story. And this, in essence, has acted as a cautionary tale. This is what happens to you if you try to increase the VAT. The public won't understand, and they will turn against you. Many years later, this happened here in the UK as regards the pasties tax. I don't know how well any of you follow UK news, but this during the early 2000s became a huge issue here in the UK as well. What is the story? The UK, in this VAT legislation, has a zero rate of VAT for catering. As part of the kind of process of dealing with a financial crisis, the government decided to move catering to a standard rate of VAT. Now, the objective was to catch all expensive catering, big London cocktail parties and art gallery receptions, etc. That was the aim. But amongst many other things that were included in catering was also a pasty. I don't know if you're familiar with what a pasty is. I have to admit that I didn't know what a pasty was until this tax issue arose. But it's something about this size that looks like in Italy we would call a calzone. So kind of like this. And it's the outside is made of pastry, and the inside is basically meat, heavy meat, so red meat like beef, etc. And it has a very kind of a heavy stew sauce in it. That means that because it has a lot of proteins, is a product with a lot of proteins. This product was very regularly eaten by working class British citizens. So people that did manual work, that work in construction, that worked in mines, etc., etc. What happened was that when this proposal for catering to increase the VAT came through, the opposition picked up on this issue and painted it as a tax on pasties. So long gone were the issue of caterings in London or big reception parties, etc. And the media picked up on this for months on end on the UK pasties tax. And the idea was very simple, that the government wanted to tax British working class manual workers that were used to buying pasties in the supermarket during a hard day's labor. The government ended up giving up on the bill. It was never approved. And many years later, a couple of years ago, actually, just 2 or 3 years ago, this story shows up on David Cameron's memoirs. So this discussion was held during the period that David Cameron was Prime Minister of the UK. And he mentions this issue on his memoirs. Now, I have to admit, I didn't read the memoirs, but someone that did sent me a photo of the passage where this is mentioned. And his lesson was, from the pastis tax debate, you should never try to mess with the VAT base. It's just not worth it. Now, I read that and I actually have to say that I was pretty angry about it, because the lesson for me from the pastis tax is not so much that you shouldn't touch the VAT base, is that you should inform the public better. Now, there is many other stories, as I said, that are in the paper, and I'll be happy to discuss with you any of them, involving tampons, involving restaurants, etc. But the basic idea is the same. The political economy is what's preventing the having a broad-based VAT. Exemptions and reduced rates in VAT are there not for efficiency reasons, not for equity reasons. They are there primarily for political economy reasons, because it's so difficult to explain to people why reduced rates of VAT and exemptions don't help the poor. Now, looking at that, what we do in the paper is that we look at the various dynamics. What are these political economy constraints? Why are people resistant to broad-based VATs? And it starts with a very basic problem of what we call the information asymmetry. So a problem that has been identified in many other areas of tax policy, and actually on policy generally, by economists, which is the information that experts have is not identical necessarily to the information that the general public has. So everyone understands how income taxes function. So you earn money, you pay. You earn profits, you pay. The details of it are quite complex, as you all know, but the basics are understandable. That is not the case with VAT. VAT functions in a non-intuitive manner, in a way that is not clear-cut. So people don't really understand how this kind of, stage-by-stage collection of the tax functions. So there is a big gap between what us experts know and what the general public knows about VAT. Then what happens is that information asymmetry is exploited by interest groups, by people that actually want tax breaks, right? So they want a tax break, but they don't want to say to you that it's a tax break. So they use all these schemes saying about protection the poor, etc., to convince the public that this is a good policy. Now, I already kind of felt that this was the case, but a couple of years ago, I was in a class where students in my class were from all over the world. In actual fact, Rajendra mentioned in the beginning that I supervise a lot of research students, which is true. I should have added in the beginning that one of my very dear research students is actually Indian, Ananya. And she is researching on VAT, not on this area, but on VAT in adapting VAT to the digital economy and the challenges faced in countries like India. So this is, I hope, someone to look out for in the Indian tax policy, an expert setting. I hope she will be able to make a great contribution to tax once she finishes her studies here in the UK. But going back to my class, I had this class a few years ago where there were students from all over the world. And I was explaining all of the dynamics. And one of my students from Germany lifted her arm and said, "Oh, I have a case." And for me, when she lifted her arm, because I have done all these classes for a long time, I thought she was going to say that in Germany, there was opposition or pressure to implement reduced rates on this product or on that product. So she was going to talk to me about some political economy constraints that existed in Germany. What she told me was actually something much more interesting and completely different. What she told me was that she had a friend that worked as a lobbyist for a company that produced tampons. And the company, her friend, had hired NGOs to build a campaign for reduction of VAT on tampons on the basis of gender equality. So the company wanted a tax break. They wanted a reduction of VAT on tampons. They knew that doing it themselves would probably not convince the public. So they instrumentalized an NGO to make the campaign on their behalf, to actually make the case for gender equality in favor of reducing the rate. And this issue of the gender equality or issue of protecting the poor is a core element of how lobbyists operate and how special interest groups operate. They use fairness as the cornerstone of their narrative. So no public is going to support a big energy company like BP or Shell or whatever saying we want a tax break, right? No one is going to support that. The public is not going to get behind it. However, if they say we should have lower VAT to protect people's energy consumption and the poorest from the huge increases in energy prices, then you might get public support. There's no point on saying tampons, you want a tax break. You say that it's about gender equality. If you're a restaurant, you don't say that it's about a tax break. You say that it's about employing people, low-skilled workers. If you are producing food, you don't say that it's about, wanting a tax break. You say that it's about helping the poor, buying food. So the core element of how the lobbyists and the special interest groups function is on the basis of this fairness narrative. Why does this work? Because we humans love a fair story, a story of fairness. Have you ever thought why, when we go to the cinema and in the end of the film, the good person is rewarded and the bad person is punished, and we leave the cinema with a happy face and with a smile, etc., and we feel good? This happens, that feeling good sentiment is basically endorphins, hormones being released into your brain. We know from behavioral studies that seeing situations of fairness in which those that are good are recompensated and those that are bad are punished actually triggers in our brain a reward system. We immediately start secreting endorphins from watching a fairness situation. So this too is basically what is at the source of how the special interest groups function. They are, by using a fairness narrative, by saying that this is about protecting the poor, that this is about gender equality, that this is about low-skilled workers, etc., they are eliciting in your brain these sentiments on supporting fairness. So they are gathering support by telling you a story of good versus evil, right? Now, these are the obstacles that you face trying to explain to people. But let's imagine you are actually able to convince people all of this that I'm telling you. And I have been on many sessions in many countries around the world where I do exactly that. I go and explain all of this. There will always be someone in the audience that is still suspicious. This is a key element of these political economy constraints. So even if you understand what is going on, you don't trust enough the system to make the right calls. I'm telling you all of this and you say, are you sure? Do you know for sure that reduced rates of VAT don't decrease the prices? It doesn't feel right to me. This is what is known in behavioral science as cognitive dissonance. You believe in a specific position, you have adopted a specific position on a topic for a long time. So when new information comes in and tells you that maybe your beliefs are wrong, you immediately distrust this new information. So your instinctive reaction is to distrust this instinctive information, this new information. And then there is this issue of, in essence, a loss aversion. Okay, so you're telling me that reduced rates of VAT and exemptions don't work. Okay, I believe you. But what if I give up the reduced rates and the exemptions now, and nothing happens afterwards? Public services don't improve. There's no welfare transfers to the poorest. So you're telling me to give up something now in light of a benefit in the future that may or may not come. This is also what is known as the status quo bias. So people are always suspicious of things that are going to come in the future, but are not happening now. So they prefer what is happening now. So, for example, put this in the context of non-tax, right? If I asked you, as I have done in many classes of mine with students, what is your favorite food? You will think of something that your mother used to make. This is because this is what we are used to. So this is something that is ingrained in us. We like what we know. And so we are always fearful of the unknown. So any policy change that entails something in the future that you can't control is going to cause distrust. And then at policy circles level, there is often this idea from tax administrations and treasuries, etc. We have invested in this system so much, and changing it now would be so complex. This is what is known as sunk cost fallacy and path dependency. We always have had this. So I might as well continue to invest in this system because changing creates too much disruption, right? How do you overcome these constraints? First of all, information. I'm relying on you the same way I have relied on others that have attended my seminars on this topic to go out there and explain to people to combat the information asymmetry, to tell them that this is not true, that that these exemptions and reduced rates are not necessarily helping the poorest. But doing so entails, in a way, becoming less technical, meaning there's no point on going to the general public. So it's fine here in this seminar, but to the general public, there's no point on saying something like, oh, it will be better for GDP, or it will decrease economic distortions, or it will eliminate court litigation and qualification problems. That means zero for the general public, right? So you have to say it in a way, the narrative has to be the same type of narrative as the lobbyist groups have, a narrative of fairness. Having a broad-based GST, eliminating reduced rates, eliminating exemptions is an issue of fairness. It is an issue of taxing the consumption of the richest so that we can provide public service to the poorest. It is about taxing someone like me when I buy books or when I go to the opera, so that money can be given to buy books for a library in a poorer neighborhood. It is a fundamental issue of fairness and redistribution of wealth among society. The richest paying more for the benefit of the poorest. Now, it might be that even if you do all of this, people will still distrust you. They are afraid of giving up this reduced rate of VAT in light of the benefit that may or may not come. So this is where the progressive VAT comes in. And this is the last section of the presentation that I wanted to give you today. How does the progressive VAT would function? It would function, the concept is quite simple. You have a standard rate of VAT, broad base, no exemptions, no reduced rates. But you return the VAT to low-income individuals in real time. So it is, in essence, from a legal perspective, it is, in essence, a welfare transfer. But it is much better than the modern VAT, so much better than what exists now, because it's done in real time. So it is, from a legal perspective, a welfare transfer, but for the consumer, the one that is going to the shop, it will feel like an exemption. How would this work? Let's imagine that you go to a shop, to a supermarket right now. You do your weekly shopping, you buy food, whatever it is, food, detergents, cleaning products, etc. Right? When you arrive to the cash machine, the cash register person asks you for your tax number. Once you give your tax number, the information of your tax number is sent in real time to a data warehouse. That data warehouse will identify you as either a low-income individual or a non-low-income individual. If you are identified by the system as a low-income individual, the payment will not have any VAT. There will be an immediate transfer of the VAT to your account. So the retailer still accepts the money, but the money is being returned to you in real time to your account. So this real-time technology, this solution is basically being facilitated by this new technology called real-time technology. Now, we already have this technology. This technology exists and is being implemented in several countries around the world. This is the case in South Korea, which is one of the precursors of the real-time technology, the case of Israel, the case of Russia, the case of Portugal. All of these countries have real-time technology. The difference is, in these countries, real-time technology is being used to detect fraud. So it's there to basically prevent the underreporting of sales on cash registers. So you give your tax number so that the system records that sale, and therefore the owner of the shop has to pay corporate income tax, has to collect VAT, or has to pay personal income tax, right? Depending on whether it's incorporated or not incorporated, right? So the real-time technology and data warehouses are in operation, but they exist for fraud purposes. Now, countries that have implemented this system rave about how successful it is. So if you speak, as I have, with Israeli officials, they will tell you that there is no more fraud in their country. So it has been eliminated by real-time technology. Now, I seriously doubt that that is the case because it is impossible to eradicate fraud, but it is true that this technology is extremely powerful on combating fraud. It makes it very hard to underreport sales. Now, it is also true that even beyond these countries that already have a real-time technology, this mobile and digital money has spread all over the world, primarily in the context of the pandemic. So countries like Kenya and more recently Colombia have been precursors on the use of digital money. So the facility in which you receive money through the basis of in real time, through the basis of digital means, has increased massively and has spread around the world. So some countries use mobile phones, for example, for the transfer of this digital money, but in a very successful manner. So what you see in developing countries, including, for example, Kenya, is that this digital money is reaching people in terms of welfare transfers that we never thought was possible. So people that live in very, very rural areas of Kenya, that have no fixed phone, that may have no bank accounts, etc., but they have a mobile phone. And that mobile phone is what facilitates this system of transfer of welfare. There is various kind of core design features. I won't dwell on it because it's a bit boring, of this system. One of the key issues, I guess, is that there would be a ceiling on how much you can actually get back in terms of the VAT, and this is to prevent fraud, basically. So there would be a threshold, so you can get the VAT back as a low income, but up to a certain level of consumption, right? So I don't know, $100 a year, $300 a year, whatever it is, the average VAT consumption of that individual. The result would be that this system would immediately increase revenue and increase efficiency. So there would be an instantaneous increase in efficiency and revenue. But key to this is that in tax policy, usually, when you have an increase in revenue in any deficiency, you have a decrease in equity. So usually there's a trade-off between the two: more equity, less efficiency; more efficiency, less equity. this actually would make the system more equitable. So this immediately has a positive effect on inequality. So as soon as you introduce this system, inequality as measured by the so-called Gini coefficient, inequality immediately comes down. So you have this kind of perfect Goldilocks situation where you have a system that is efficient and is collecting more revenue at the same time as decreasing inequality. So this is absolutely unheard of in tax policy. So main gains is less inequality, so equity gains, it's more efficient, gathers more revenue. Because it eliminates a lot of this because people feel that it is like an exemption and it merges the two moments, there is less suspicion and it's much more easy from a political economy perspective to convince people to have such a system. And it has a bunch of other spillover effects that I won't dwell on, but there is trade balance gains, there is compliance gains. There is some privacy risks and some fraud risks. I think the fraud risks we are able to manage well by putting the threshold on how much you can get back. On privacy, there is more concerns. Real-time technology in general creates privacy concerns. This is something that any country that would implement such a system would have to take into consideration. So how to protect the data that is being collected from taxpayers, not only from being used internally, but critically from hacking from outsiders. So this is a concern, but we think it's no different from the use of real-time technology as it is used now for the purposes of fraud. And that's it. That's what I wanted to say. Thank you so much for your attention. I have been talking for a long time, for an hour. So I'll pass it back to my hosts, and I look forward to your comments. Thank you.
Thank you, Rita, for that wonderful talk that you just now delivered. And I'm happy to inform you that as of now, 882 members from 10 countries apart from India, which means there are 11 countries and 882 members have just heard you speak on this wonderful topic. And whatever you spoke, whatever you presented, are the common problems, common issues on this VAT. And yes, VAT is progressive, as you said. There's no stopping VAT. There's no stopping GST in India. And the issues, what you call as classification, whether it's cake or a biscuit, whether it's a fruit juice or a carbonated drink, the issues will certainly run and make the world of VAT more interesting. And I always say, people who deal in VAT never grow old. Because their mind is always young, thinking, deliberating, looking at issues, the cases, and making life more interesting. That's really a wonderful talk, and I sincerely thank you. There are a few questions which our audience have just asked. If you permit me, I'll just read out a few questions for you. In fact, some of them are interested to know, because I know that you have worked in the Brazilian VAT. I've followed that also, and your contribution to reform the Brazilian VAT is enormous. And you did mention that Brazil has multiple VAT rates. And Brazil is again a federal country like India. So what are those problems that you still face in Brazil, and what you see are the problems that Brazil has in implementing a smooth VAT system? Can you throw some light on that?
Yes, of course. So Brazil has two problems with their VAT. The first is what you just highlighted about the multiple rates. The second is something that is actually quite unusual. It's not common throughout the world. Brazil has a system where they don't apply destination inside the country. So they have various states, and these states have the trade amongst these states functions on the basis of partially origin, partially taxation at destination. So that means that if you establish yourself in state A, you will be subject partially to the rate of that country, that state, and partially to the rate of the country, of the state where your customer is. That means that basically there is a massive level of tax competition inside Brazil, because various states are offering better rates on VAT. So this is almost unheard of on VAT. It's very common, as you know, on corporate income tax. People move around the world, companies move around the world for better rates. But on VAT, because of the principle of destination, this doesn't tend to happen. So it doesn't matter if your factory is in India or if your factory is in Bangladesh. If your customer is in India, it's going to pay Indian VAT, right? So it doesn't matter where you're located, but in Brazil it does. And because it does, states are constantly offering tax breaks. They're saying, oh, if you come to my state, if you construct a factory in my state, I will give you a lower rate of VAT. And that makes it very, very hard for traders. And it makes it very, very hard to reform as well, because there is so many invested interests. Now, what is interesting also, I should say to you, Rajendra, is that during my various participations on the Brazilian VAT reform process, many times India was mentioned. So Brazilian politicians would say, look at India. India could do it. Why can't we do it? So they have even used to use your slogan, you know, one country, one VAT. Or one GST. So I actually heard Brazilian politicians using that sentence from India, and it shows how interconnected we all are, right? So we are all looking at each other. The world is massively interconnected. We're just, what separates us is just so small compared to what unites us all. We are all facing the same problems. And the Brazilian VAT reform is really an example of that. India is leading the way on this, saying it's possible on the federal country to do it. We have done it. It's never easy. Of course, it isn't. You have to make concessions on VAT rates. Of course, it's never easy, but it's possible. And that actually has been a light, a shining light for the Brazilians to know that there is hope. There is light at the end of the tunnel. So a federal country, a huge federal country like India is bigger than Brazil even. And Brazil is a big country, but India is even bigger, and they could do it. So we can do it too. So it just goes to show, you never know when your tax reforms will serve as example in other countries.
Thank you for those nice words. In fact, so going for tax shopping, from what you just said, we the tax professionals have a bright future in Brazil. You
do indeed. Start contacting your colleagues in Brazil. There's a bright future ahead.
A bright future ahead, yes. There's one question which Mr. Deepak is asking from Delhi. How far, because I know you have done work on this, I have read your articles on this particular topic, and you do believe, but then the question is this: how far is it correct that lower rate of VAT is good for economy? I think you are one person who speaks of lower VAT rates, not multiple rates and so on. How far do you think it's good for an economy of a country, specifically like India, which is so big, geographically spread, multiple habits of population and so on? Can you just throw some light on this?
Yeah, so there's two elements to this story. First of all is to say that in principle, it doesn't influence businesses because VAT is deductible, right? So all going well for businesses, it should be indifferent whether there is a reduced or standard rate of VAT, because all VAT is deductible. Now, what it matters is for demand, right? So whether the demand will increase if you have a lower rate or not. And what I have just shown you is that these studies on the pass-through, on whether VAT will decreases are reflected on prices, show you that it's very difficult to increase demand by lowering the VAT. So you can help specific sectors, and this actually has happened. For example, during the pandemic. Countries have helped the hospitality sector, for example, by reducing the rate of VAT. that in essence is a subsidy to those sectors because they weren't doing business, etc. But to help them on a systematic basis, it's counterproductive because everyone is going to ask for it. And if everyone asks for it, then you're left with no revenue for public services. And there is nothing better for economic growth, nothing better than investing in your people, than investing on education, than investing on infrastructure. There's literally nothing better for economic growth than good public services that will bring your people up and will make your people richer.
Thank you very much. There's one academic question which is asked by, again, a person from Delhi, Karishma Babani. And she's a simple question. She just asked, what is the meaning of progressive VAT? How progressive is VAT? Is it progressive?
Well, the general answer is that the traditional VAT is not progressive. But the idea, this is precisely what we're trying to do. We're trying to make VAT progressive by making richer people continue to pay a standard rate of VAT, but giving back the money to the poorest. So that the rich consumption, the consumption done by the richest pays a normal tax of rate of tax, but the consumption made by the poorest is in essence subsidized so that the poorest don't pay so much VAT. And that's what makes it progressive. We are taxing people like you and me, Rajendra, so that people that don't have the money, fortunately, that the two of us have, those people that cannot afford to buy books or to go to private clinics, that those people are still protected. That's what the progressive VAT means.
Like many people, some of them have asked this question also, I am also perplexed. Why, and why at all, that the United States of America is still far away from the world when it comes to the very lucrative area of consumption taxes? Why is that? Any thoughts on that?
Yes, it's because in essence, it's such a politicized issue. There's various dimensions to that problem, the political constraints, but Republicans don't like it because VAT collects too much money and they want a small state. And Democrats don't want it because it's too regressive, they think. So you are caught on this situation. Various presidents have tried. So the Bush administration tried in 2005. Then in 2008, the Obama administration, which was Democrat, tried as well to consider the possibility of a VAT. The policy experts in the US know that this is the right choice, but they can't get the political agreement, as in many other things in the US, like gun control or abortion or etc. There's so many kind of polarization of ideas on this topic that they can't get into an agreement. But if you talk to any American tax expert, they know that VAT is the right way forward. They know that this is the right policy.
Thank you very much. And I also believe that it is more of political than any other considerations. And it has been one of the taxes for the world economies, and highly politicized and also used as a political tool to come to power by political parties. So that's it. And one question from Priyanka Dhamija, who comes from Chandigarh. A very interesting question. How do you treat intermediaries in other geographies? Because they're a part of a system, intermediaries.
What type of intermediaries? Because there is various levels. So so what type of intermediary? If it's a normal intermediary, is treated in a normal kind of business way, can deduct the input VAT, collects the VAT, etc. But we have a new form of intermediaries now in Europe, which are collectors of VAT, the digital platforms. So if you are acting as intermediary for sales coming from outside Europe into Europe, you are de facto responsible for collecting the VAT on those sales. So, for example, Amazon or eBay or Alibaba, etc., doing sales or allowing sales to be made by third parties in their platforms means that they are now responsible into European customers. They are now responsible for collecting the VAT on those sales. So if I buy a mobile phone from an Indian supplier through Amazon, Amazon is in charge of collecting the VAT on that mobile phone. So there is various levels of intermediaries. We now have this new level because of the digital economy. They are known in Europe as deemed suppliers. So the intermediaries have different status. We now have intermediaries that are de facto taxpayers on behalf of other people. So actually intermediation, this is a very interesting area. Digital taxation is posing loads of challenges to the VAT system. That's another very interesting area, a topic for another day, I guess.
Thank you. One question from me. How Brexit has changed life for the tax professionals?
Oh, massively. So if you want a lot of business, this is the time in VAT, this is the time to come to the UK. Because suddenly, overnight, you now had border controls where there was no border controls. So the amount of compliance from a customs perspective, from a VAT perspective, is enormous. So it is such a seismic change. The businesses are regularly in the media complaining that they have increase in compliance costs of 20 to 30% because of Brexit. So this is insane numbers. So the message is, if you're VAT or a customs duty practitioner and you're looking for jobs, there is loads of opportunities in the new UK system, including at HMRC level. So there are new customs officials being hired as civil servants. There is a huge drive to hire new civil servants in this area. Because there is just so much need to control now the borders.
So with that positive note that there are a lot of opportunities for the VAT professionals in the United Kingdom because of Brexit. Yes, life has always been a challenge when it comes to a VAT practitioner and especially a person like you who works on the policy, because you need to walk on eggs without breaking them. That's the life of a tax expert or even a professional like you. So we have come to the end of the program, Rita. It's a wonderful hearing you. Great presentation. And thank you so much for answering all our questions. And yes, as I said, we will host you physically in India very soon. Ladies and gentlemen, for all those 880 plus audience who are here with us today, thank you very much for making us so proud by your presence. And to all those other countries' participants who logged in, I know it's Rita's knowledge bank that has drawn you to this great nation, India. Rita, thank you very much.
Thank you all. Bye.
Thank you, ma'am. Thank you, ma'am, for the session.